Since the release of the definitive feasibility study for their Matilda Gold project earlier this year, Blackham Resources has announced a number of key updates. This has resulted in our base case valuation increasing from 87 cents per share up to 99 cents per share. The key drivers for the change in our valuation was our mine life, gold price, as well as the forecasted future number of shares on issue. Whilst only 59,000 ounces were added to the mine life in the latest upgrade compared to the DFS, Blackham has now increased the mine life by nearly 300,000 ounces, or 52% since the PFS was released just over 6 months ago. This is a fantastic achievement and continues to support our belief that there remains excellent exploration potential at the project. The recent program that has just commenced at Lakeway is a good example of this, as there has been very little exploration work at the project in the past decade, despite there being a known resource close to surface. We look forward to these results being announced in the coming months. But much of the recent exploration work has been focused on underground, with the Bulletin deposit the latest to deliver. Bulletin provides valuable ounces to Blackham, not just because the grade is nearly 5 grams per tonne, but because much of the infrastructure surrounding the deposit is already in place, meaning limited additional capital will be required to be spent for mining to recommence. We also note that this upgrade was in a shallower section of the ore body, as it was only 150 metres below surface, which again improves the deposit's economics. Given this upgrade, recent exploration results, historical grades mined, as well as reviewing our underground head grade compared to Blackham's revised mine plan, we have slightly increased our underground head grade to approximately 6 grams per tonne over the life of the project. To examine the effect the underground grade mined has on our valuation, we ran a number of different scenarios. We note that for every half a gram per tonne increase in the underground grade mined, our valuation increased by approximately 15 cents per share. The gold price has continued its recent strong rally, as it has now been above $1,700 per ounce for the past 3 months. Given this, we have revised our gold price assumption up. However, we note our price remains relatively conservative, as it is still less than the current gold price. But given the fluctuations that can occur in commodity prices, we have examined a range of different gold price scenarios. We note that for every $100 per ounce change in the gold price, our valuation changes by approximately 16 cents per share. Our DFS update had assumed an additional capital raising would be required prior to production commencing, so this raising did not surprise us. We were pleased by the terms for a number of reasons. First, it was at a higher share price than what we had originally anticipated. Secondly, the register was strengthened with the introduction of a number of new institutional investors. And most importantly, Blackham provided itself with a safety net if the worst case scenario was to occur during the ramp-up phase. Now, whilst we don't expect this to be an issue for Blackham, given the infrastructure and mine development is already in place, history has shown there are multiple examples of gold projects that have experienced cost overruns and slower ramp-ups in production than originally anticipated. When this has occurred, the company is forced into a heavily discounted raising as investors realise the company has little other choice. Instead, Blackham was able to dictate the terms of the raising and achieve an issue price that was double their share price at the start of this year. As we forecasted in our DFS update, Blackham has entered into a hedging policy. This is a prudent exercise and provides greater certainty on revenue, especially in the initial stages of production, as cash costs can be higher during this time. We believe management may consider additional hedging in the future if the gold price spikes, as the opportunity to lock in potentially more than $600 per ounce profits based on today's gold price and the life of mine all-in sustaining costs may be simply too good to resist, especially if the company's share price continues to be at such a great discount to their potential valuation. And finally, we believe there are a number of catalysts in the coming 6 to 12 months that could see the gap between our valuation and Blackham's share price decrease further. These include continued exploration results at all deposits, which will be followed by reserve and resource upgrades prior to first production, and most importantly, first gold production, which is due to commence during the third quarter. A PDF version of our valuation and financial forecasts is available at the Sophisticated Investor website by simply clicking on the link.